Hey there, and welcome back to Crypto Clarified, Investing in the Truth. This is a podcast series where we come together to discuss the most captivating headlines and trends from the crypto space. My name is Benjamin Dean, and I'm Director in WisdomTree's Digital Assets team. Today I've got the pleasure of being joined by Morgan Krupetsky, the Director of Business Development at Ava Labs. Before I ask Morgan to introduce herself, we've got a few things, a bit of housekeeping. First of all, the social media shout-outs. You can find me on the Bird app at Benjamin Dean. If you're in the US and you're a listener, join the waitlist to WisdomTree Prime, wisdomtreeprime.com. And regardless of where you're listening or watching this, YouTube, Spotify, Apple, wherever, hit the subscribe button because that means that you get up-to-date postings as we release new content. For today's episode, we're going to speak with Morgan about Avalanche. We're going to go over what Avalanche is and what Ava Labs is. We're going to talk about the ecosystem, differentiating features, some institutional use cases. And then, as always, we'll finish up with a look towards the future to what developments Morgan at Avalanche sees, but also just more broadly in the crypto space, which, as we know, is constantly changing and can be hard to keep track of. Before we get into the episode, I've got to give my shout out to James and Sam in compliance. I need to state the following. To clarify, the views and opinions expressed in this podcast are those of WisdomTree and Ava Labs and subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results. Now on to the fun stuff. Morgan, thanks for joining me today. It's a pleasure to have you here.
Thanks for having me, Ben. Really appreciate it.
So to kick off these episodes, we usually give guests a chance to introduce themselves a little bit. It can be as personal as you want. How'd you get involved in this space? When was it? Why? And what are you doing now that you're at Ava Labs?
Sure. So like you mentioned, I'm Director of Business Development for Ava Labs. And in particular, I focus on the institutions and capital markets. Before Ava Labs, I was in traditional finance at a bulge bracket bank for 12 years. Most of that time was spent within the institutional sales and trading business, covering hedge funds, asset managers like WisdomTree, pension funds, for foreign exchange and macro derivatives products. And then the last 2 years I spent actually as chief of staff to the firm's chief compliance officer. So really appreciate the disclosures you gave at the beginning of the session. Now at Ava Labs, in my role in partnering with different institutions, I really work with kind of the whole spectrum of different types of financial services institutions. So banks, asset managers, hedge funds, private equity firms, venture funds, and then the more crypto native versions of those things to, at a very high level, invest in, build on, use, or deploy capital into Avalanche in some way, shape, or form. So we're really trying to kind of drive forward the growth and adoption of the Avalanche blockchain, which obviously we'll go into in a little bit. In terms of what really prompted my move, for me, it was really kind of discovering the capabilities of smart contracts and really being embedded in the traditional financial services space, where I kind of saw firsthand what using smart contracts and smart contract capabilities could mean for whether it was actually trading, premium settlements, margin exchange, all these different kind of middle and back office functionalities that inherently could be improved through using smart contracts and blockchain technology. And oftentimes these aren't necessarily like the exciting use cases that a lot of people kind of think about when they think about the technology, but I almost think these are the more like impactful things that personally I'm really excited about. And so that's kind of what really drove my move into this space. And in this position, I'm kind of helping to pull institutions along on their journeys in a very kind of high touch, trusted advisor type of way. So really, it's been an awesome journey. We're super busy despite kind of macro market conditions, and really excited for what's to come.
So a reformed finance person, but you could only escape just so far via a role in compliance. You're not a reformed compliance person, though, right? I mean, we love compliance on this episode, as
I
you
love
already see.
compliance.
Yeah, nobody loves compliance more than me. So I'm glad we're on the same page there. But I did notice, and you'll have to forgive my originally Australian accent, because I was saying Ava Labs with a strong A, but you said Ava Labs, like lava. So we've already learned something so far that I didn't know how to pronounce Ava Labs,
Yeah,
but
now you
that
know.
won't happen again. I promise. It won't happen.
No worries. I hear it all. I hear it all. So no problem at all.
Now, what's kind of interesting there is, coming from a finance background, you could see that these smart contracts, automated computer scripts, might have some potential in automating some of the back office functions. And we hear that a lot, both here at Wisdom Tree, but also just more broadly, a lot of folks coming across in finance. You don't have like a technical background per se, right? It seemed obvious that this is a few ways in which it could be used.
Yeah, exactly. I mean, I don't have a technical background, but I've definitely learned a lot. I think being kind of transitioning to this industry, you're constantly drinking from a fire hose that's like on fire. So it's definitely a steep learning curve. That's a consistently steep learning curve every day. But yeah, I mean, I think in terms of my experience previously, and frankly, I think that this is probably evident in whether it's any bank, any kind of financial services company, or frankly, any large corporate or corporation where things are inherently disparate, whether it's systems or ways of working and different functionalities that don't necessarily speak to each other, and kind of seeing the ability for potentially all these disparate players, frankly, either whether it's teams within a specific company or different companies among a consortium within an industry, being kind of put together on some kind of shared responsibility platform and being able to see the end-to-end flow of whatever it is, whether it's a trade or other type of process, loan administration, whatever it is, in a way that doesn't rely on one counterparty or one centralized counterparty to kind of be the arbiter of truth, and be able to streamline certain processes in a way that just makes things more efficient and work better and faster and ultimately less error prone and kind of fraud proof.
Got it. The reason I asked the original question is because sometimes I notice folks get scared away from the space because they think, oh, if I'm not technical, then I couldn't possibly understand it. It reminds me a little bit of when I worked in cybersecurity before coming over to this space, and we got the same response. It was a big debate about whether you could do cybersecurity if you weren't technical. And what's kind of interesting is it's something I learned from that experience. We were pulling in people from all different disciplines because you just didn't have enough cybersecurity people. And funny enough,
Yeah.
it was like the psychology people who ended up being super useful because a lot of hacking takes advantage of people's psychology by fooling them. So it's kind of just for listeners, for anyone who's out there who's saying, the space is unapproachable because I'm not technical. It's, just don't let that hold you back because, as Morgan's pointing out from her experience and certainly from mine, there's plenty of stuff to be done, plenty of understanding you can get that's unique, given, as you say, all the different disparate backgrounds.
Yeah, I think maybe just to add to that point, I think on the one hand, in the grand scheme of things, it's still super early. And so it's definitely not too late or what have you in terms of kind of getting involved in this space. And there's so much information out there in that you can, if you put in the effort, you can kind of get up the learning curve and become more technically inclined in that way. And frankly, I think, having the technical capabilities is one thing and is great, but to the extent you can toe the line in the business world, whatever that business is, whether it's financial services or other Web 2 or more traditional type of companies and use cases, and kind of toe that line between that world and putting the tech to more practical use, that I think is extremely kind of valuable. And being able to, however you want to phrase it, toe the line, speak both languages, like whatever it is very useful and value add. And I think also just being able to simplify certain things and certain concepts. Like I think so many of us get so far lost in the rabbit hole that we, look up and the rabbit hole is like a dot, and we don't even realize that like we're even speaking in such technical terms, right? So to be able to take a step back and simplify things like that, I almost feel like makes somebody that much more powerful and effective in the space. So very much echo everything you said.
All right, let's try and use some of these skills now, because we're going to turn to the part where we talk about what Avalanche is.
Sure.
We can kick off with kind of the history and where it came from. You can talk about the relationship between Avalanche and Ava Labs. And then maybe we'll see if we can skirt around the technical stuff without kind of losing too many people along the way.
Sure. So Ava Labs actually has extremely kind of deep embedded academic roots. It was founded by a Cornell computer science and distributed systems professor named Emin Gunsir and his then PhD students, Kevin Seknicki and Ted Yin. So today, Emin is Ava Labs founder and CEO, and Kevin is our COO, and Ted is our chief protocol architect. Emin has actually been in the space since like the beginning of cryptocurrencies. Back in 2002, he actually created the first ever proof of work cryptocurrency and peer-to-peer e-cash system called Karma. And even through today, he continues to be a notable thought leader in the space, as well as an author, a lecturer, consultant, and advisor to everyone from kind of crypto projects, governments, central banks, Fortune 500 companies, and really everything in between. So again, deep embedded kind of academic roots. And at Cornell, the team actually discovered a report that was published by a pseudonymous author called Team Rocket in 2018. And this report is the thing that introduced what was called Avalanche consensus, which is the third ever most novel consensus mechanism behind classical and Nakamoto. And we can kind of go into like why that's important and what that means from a high level standpoint. But from there, the group went on to build out the Avalanche protocol or the Avalanche blockchain. So as a public blockchain network, Avalanche was launched by the Avalanche Foundation on mainnet in September of 2020. So in the grand scheme of things, it's still a relatively new platform compared to some of its peers. And Avalanche in and of itself is a layer one EVM compatible, but really VM agnostic smart contracts platform for decentralized applications or dApps across many different use cases and verticals that your listeners may probably be more familiar with, like DeFi, gaming, NFTs, enterprises, institutions, exchanges and wallets, and probably many use cases that we haven't even thought of yet, which we're very excited about. And then Ava Labs as a company is a software company, and it's the license service provided to the Avalanche Foundation. At a high level, Ava Labs builds infrastructure and tooling to really drive the growth and adoption of the Avalanche blockchain and ecosystem. And so what that means from a business development standpoint is really working with partners from across different industries to support them in their blockchain and digital asset journeys on Avalanche and in a trusted advisor capacity. So we help with everything from one-on-one partnerships, investments, facilitating connections with other ecosystem projects, technical support, go-to-market strategy, and advisory, so on and so forth. So it's pretty all-encompassing, but at a high level, it's really to drive the growth and adoption of the chain itself.
Nice. There's a few ideas to unpack here before we move on that might not be obvious to everyone who's listening. The first is the way in which kind of Emin, one of these people who contributed intellectual property into the space before Bitcoin. Like there's easily 40 to 50 years of technology history that predates Bitcoin's arrival. It didn't just arrive out of thin air. So there's that piece, and it's nice to see where Emin's had come to with this. I must have run into him a few times when I lived in New York. And it's super interesting to see how, like, over time, this dynamic of experimentation in the space has occurred. And as you say, Avalanche is a relatively new network. It's one of many different networks that now provide the kinds of services one associated with Ethereum previously, but configured differently. There's the piece there where, like, you've got Ava Labs. Remember, like, the Bitcoin doesn't have a CEO. It doesn't have a Bitcoin company. You can't ring up the Bitcoin CEO and complain. What's interesting over time is to watch as foundations then companies themselves have started to crop up and develop and maintain this infrastructure. And the last piece you were saying there is kind of all the capabilities you have internally. It sounds like a software company. It doesn't sound like the kind of crazy crypto uh, stuff that fills up the headlines. There's some
Yeah.
serious business development efforts going on with Avalanche, Ava Labs, but also across the space. It's maybe not obvious to folks.
Yeah, I think that's right. I mean, I think a lot of times we'll be speaking with different partners, whether they're um, groups of builders or larger enterprises and institutions, where they say, we don't have a U at so and so chain, and we don't have a group that can kind of handhold us through the ideation and deployment process to really kind of set them up to succeed in their particular use case. And so I think for us in particular, and a big reason in terms of why I joined the team, is because the team is this amazing mix of academics, engineers, and business people who are going about things in a very thoughtful and methodical way, and really ensuring that, again, we set up our partners to succeed on Avalanche in whatever way is important to them or whichever way they need. And so that's something that, upon joining really, really resonated with me, and something that I would, definitely echo in terms of what you've just laid out.
Cool. So we've got like some unique organizational characteristics. We've got, some bright people behind it with some unique IP. There's a concept here called subnets that is one kind of interesting way in which the Avalanche network kind of differentiates itself. Let's kind of step quickly through what subnets are. What do they permit, and how is this different to other networks? Kind of the so what of subnets.
Yeah, so I would say subnets are one of the two major differentiators of Avalanche versus peers, and it's enabled, or the concept of subnets is really enabled by the first differentiator, which is the Avalanche consensus, which is what I mentioned earlier. But just to maybe quickly kind of emphasize as it relates to Avalanche consensus, and without going into too many details, the way that Avalanche consensus works is something that really enables the speed, the scalability, the decentralization, and customizability of the network. And at a high level, it's just extremely fast and enables sub-second transaction finality, which when you start talking about or thinking about financial services use cases, you can start to see why that's particularly relevant or important for those. But the other big differentiator in terms of what you just referenced are subnets or subnetworks. And practically, the way that you can think about them are application-specific or custom blockchains. So what this means is that they can give users, developers, enterprises, governments, whoever it is that's building, control over the parameters of the blockchain being deployed for their specific use case. And we can kind of go into more of the details there in terms of what's possible. But at a high level, we think this is a really big step forward over a lot of the other existing blockchain models, which are generally more monolithic and essentially kind of enforce the same set of rules across the entire network. So at a practical level, using that kind of framework, you could have a simple NFT launch on the same chain as a multi-billion-dollar loan between institutions that end up kind of being beholden to the same network logic and toolkit, which I don't think necessarily makes sense. So subnets really allow individual projects or builders or institutions, whoever it is, to control all layers of their platform in a way that's isolated from other kind of components or other subnets on the network. So this basically allows them to customize their particular blockchain for their particular use case. So it's everything from permissioning at the application level, or sorry, permissioning at the user access level, permissioning at the validator level, whether it's public or private, permissioned or permissionless, which gas token they use to power the transactions on their network, which staking token they use, which virtual machine they build on. I know I mentioned earlier Avalanche, the C chain is EVM compatible, but effectively Avalanche was built to be VM agnostic. So you can have different types of VMs or custom VMs being deployed on different subnets. So all of these things basically can be customized to address the needs of whether it's a gaming company or a consulting firm or a government agency or a financial institution. Obviously, all of those different examples are going to have very different requirements, whether regulatory or otherwise. And so subnets really allow the end deployers to be able to customize their blockchain for their particular use case.
Does it make them interoperable in the sense that if you're running on one subnet, the kind of coins or tokens that you issue on one, are they easily portable to others, or are they really segregated in a sense? They just use the validator for consensus across all of the different subnets?
So that's a really good question. And from a target state perspective, the network was always intended to be able to interoperate between and among subnets and between and among the C chain, which is a smart contract chain that generally is what people think about when they think about activity on Avalanche so far. And so with that was always part of the vision, to have interoperability and communication where and if needed. Because in some instances, you won't necessarily need that. In others, you'll require interoperability or communication between a certain set of subnets. And in others, it'll be totally permissionless from a communication standpoint. So it just depends. But long-winded way of saying, yes, there is definitely a component of communication and interoperability. And we can talk about like what a practical use case of that would be. But at a more technical level, it's enabled by this thing called Avalanche Warp Messaging, which was actually introduced by our team, AWM, at the end of last year, which introduced subnet to subnet communication. And later this year, we'll have C-chain to subnet communication, which is, again, has always been like a critical piece of the architecture of the Avalanche platform.
Cool. So let's pull a few ideas out and then we can move on to use cases in the ecosystem, because that'll like bring it into stark relief for folks. Well, what we've just gone over is, you sometimes read in the press that people will sit there and say like, Bitcoin is too slow, it's too volatile, it's too expensive to do transactions. And then they'll go, the Ethereum network, it doesn't update fast enough for financial services, the gas costs are too high, it doesn't speak to other blockchains. Over the years, there are all these criticisms leveled against whatever kind of the big thing is. And then what happens is over time, kind of the software is developed, changed, it evolves. Remember, it's not static, right? It's not obvious to a lot of people. But what you essentially just said is that there was a perceived gap in the market a few years ago. One was around the speed and the cost of transactions solved via the Avalanche consensus. The second one there is around the use of subnets for kind of what we've just talked about in interoperability, but customization is the other part you mentioned. So it gives you different features compared to other networks, which permits different use cases in summary. And then so to close it out, as you said, it changes over time. So those capabilities are being built upon. And then you've got other stuff happening in the ecosystem that you interact with as well. You mentioned EVM compatibility. That wasn't a thing a few years ago. The EVM, Ethereum virtual machine. Think about it, listeners, as kind of just like a way in which you can port code across from one network to another. It's a de facto standard almost that has meant decreased development costs, increased compatibility across networks. So it's a lot in there, but there is a lot there that's not obvious to folks who think everything is Bitcoin, nor to the folks who think that like you've got Ethereum and then a whole bunch of stuff that does the same thing. They do very, very different things, right?
Yeah, totally. And maybe I would just echo some of what you said, Ben, is that I think generally when you think about Avalanche subnets and the major kind of major things that it can enable compared to some of its peers, I'd say generally when we speak with enterprises or institutions, we kind of position subnets in truth as a way to kind of have the best of both the public permissionless chains that are out there and have all the native integrations that come with it, like on and off ramps and stable coins, other tokens, as well as with an enterprise chain that a lot of them are very kind of more accustomed to building on, in a way that A, doesn't defeat the purpose of being on a blockchain, and B, still allows them to address a lot of the regulatory and other types of considerations that potentially have prohibited them or made them skeptical of deploying on public permissionless chains. So it's a way where you can kind of have your own sandbox environment to test out different proofs of concept, test out different use cases, but in a way that will enable you to open up your network and interoperate with other subnets if that use case allows for it or requires it. So it's kind of the best of both in that way, which is something that I think we're really excited about, particularly given where we're at from a macro environment standpoint.
Cool. Now this is the part where like somebody who's listening is going to start screaming at me like, you just need a SQL database with private public key signing, that you don't need a subnet, blockchain, anything. There is a kind of interesting part here that is not obvious, and let's run through it. Why you don't just set up your own database. When you set up these networks and you have these standards, and then everybody's kind of running on the same rails, using the same software language, and so on and so forth, you get an ecosystem developing, which are different companies and service providers and open source programming teams contributing to not the Avalanche network itself, but all the stuff connected to it. Can you give us a quick rundown about like who is in this Avalanche ecosystem at the moment? Why did they turn up there? And if you've got any hints as to like where it might be going in the near term, if it's changed at all.
Yeah, so I'm happy to do that, and I definitely do want to review that. I think maybe even just before we review kind of current state, I'd like to go through like an illustrative example of what the power of subnets could bring in a more kind of like retail oriented way. But going back to what you were saying also in terms of why don't you just use a database? Like, yes, there's many times when different partners come to us giving us a use case and we always challenge, why do you need a blockchain for that? And so a lot of it is, back and forth and iterating on what exactly are you using blockchain technology for? Is that necessary? Are there certain parts of the process that make more sense being off-chain versus on-chain? So it is definitely kind of iterative. And in some cases, it doesn't necessarily make sense. Like not everything should be on-chain, and particularly not on a public permissionless chain. So it's definitely part of that kind of partnership process and relationship. But maybe to kind of use an illustrative example that I hope resonates with you. But so my teammate, Luigi Denorio Demeo, he runs our DeFi group. He always likes to kind of use the example of Pokemon, which again, none of this is any indication of anything to come, but I think it's just an illustrative example. And I think a lot of people in the industry, the idea of the Pokemon game and franchise kind of resonates with them. But he likes to imagine...
Are Pikachu's involved? Will there be Pikachu's?
Okay, get ready for it. He wants you to imagine a Pikachu subnet, okay? So this Pikachu subnet has a game where you train your Pikachu, NFT, and it grows and it levels up and it allows you to battle other players live on the subnet. So the idea is that the more you play and win, the more reward tokens you earn. Could be in the form of stable coins, a Vox token, Bitcoin, a native token that they created, whatever it is. So in a world where that Pikachu subnet, let's say it gets 10% of all Pokemon users. So let's say it's nearly 10 million users to play the game. That in and of itself is not ideal for the likes of Ethereum, Polygon, Solana, and frankly, the Avalanche C chain, for that matter. So to do that would just be not a great idea because the players of the Pikachu game wouldn't want to be interrupted with higher fees or slower confirmation times because, let's say, Taylor Swift is dropping her new like NFTs on the chain as well. So because of that, the creators decided to build the Pikachu subnet to isolate the performance of the game in and of itself. Are you with me so far?
You're reminding me of the NFT summer when everyone started minting ape NFTs, and then it clogged up the Ethereum network to the point where nobody could use it for anything else. It
That's
was too
exactly
expensive.
right.
Yep.
That's exactly right. So, and there you can insert whatever NFT drop, game, financial services transaction, to the extent that you can isolate some of these things from a performance standpoint. That's one big kind of reason as to why a particular developer would want to develop on a subnet. But ultimately, let's say the developers of the Pikachu subnet, they have many options when deploying their subnet. So for example, they can choose to have USDC as the gas token with a Pika staking token or a Pika gas and staking token. So the possibilities are really endless in terms of kind of what they want to use to power those transactions and to stake the network. The idea is that, again, you have many of these choices. And if the Pikachu subnet were what we call an elastic subnet, you'd be able to have as many validators as you want buying and staking the token and staking it to earn rewards in the form of fees and inflation, kind of similar to Avalanche or Ethereum validators today. So basically, you have your own blockchain where value accrues to you and your tokens, whatever tokens you choose to deploy. So now let's introduce AWM, Avalanche Warrant Messaging, and this concept of interoperability. Again, AWM is the way that subnets talk to each other and the way that tokens get sent from subnet to subnet. So why does the Pikachu subnet care about AWM? So to put it simply, there are many integrations, DeFi apps, etc., available, for example, on the Avalanche C chain or the public permissionless chain that generally is what people think about when they think about activity on Avalanche. Or potentially they want to use DeFi apps from other subnets where Pikachu subnet users want to take advantage of that. So some examples, let's go through some concrete examples. Let's say they want to leverage, the developers of the Pikachu subnet want to leverage Chainlink feeds on their subnet without working on getting a full integration for their own subnet. They can do that using AWM. Maybe they don't want to deploy their own version of Trader Joe Liquidity Book or Uniswap v3 or whatever DEX on their subnet and would rather just let their 10 million users take advantage of the liquidity that's already present on the other applications elsewhere throughout the network. They can do that. They may want to have, on and off ramps to centralized exchanges that are already available and integrated on the C chain. That would be very costly, obviously, to obtain themselves for their own subnet. They can do that. And then lastly, and I mean, we can keep going, but lastly, let's say they want to collaborate with the Goku subnet and launch a promotional battle where they both try to grow their user bases and offer the ability to move their NFTs across each other's networks. They can do that too. So there's a ton of different reasons in terms of how and why you have this interoperability and communication between subnets that you can start to see how the network can scale in a way that is scalable in given the use of subnets.
So they can essentially plug into others, and rather than having to build a whole thing themselves, they just kind of click in and can get access to other services that others provide.
Exactly.
Is that broadly where we're angling at? Is this idea that everything connects to everything else and doesn't exist in isolation?
Exactly. And it's created right now to isolate performance of that specific thing, but to the extent that there's a need to or desire to leverage certain DeFi primitives or other integrations, that's all possible and doable through Avalanche Warrant Messaging.
I can see how that starts, and that's maybe the segue into kind of traditional financial services, because there is kind of a wall up between the crypto space and the DeFi space. Like Uniswap, there's not really many traditional financial service providers that can click in to Uniswap. Although I am starting to see some kind of regulated tokens turning up on Uniswap these days, so that's changing in real time. There is, of course, Aave Arc as well, which has like an institutional KYC'd or whitelisted integration. So I could see then how, like, if you're in a financial services provider and you have certain regulatory and compliance requirements, you need to know who the people are, but you also want to interact with all of this other stuff in this, until now, relatively segregated DeFi space. Is that where we're kind of
Yeah.
angling at? That it gives you this interoperability at a technical level and starts to integrate the two, the traditional financial players, and then this growing DeFi, crypto, gaming, whatever it is, it'll be something different in 18 months again. Is this burgeoning alternative set of infrastructure?
Yeah, exactly. I think to that point, and you were kind of alluding to it, that frankly, the way that a lot of permission DeFi works today is by enforcing permissioning at the application level. So you gave the example of
Hmm.
Aave. But what that does is inherently fragments liquidity and defeats the purpose or the ability to have composability and interoperability between these different types of applications. And so, what subnets allow you to do is actually bring that permissioning down to the subnet level or down to the chain level, where applications themselves don't necessarily have to worry about the permissioning because that's already happened at the blockchain level. And so the idea would be for different types of permissioned users, whether it's accredited investors or qualified purchasers or certain institutions, to go in and be permissioned one time and having access to what feels like a native DeFi experience in a way that they know, or they're comforted to know that whoever's on the other side of the trade has been KYC'd or KYB to the same extent that they've been. And so the subnet architecture is really uniquely positioned to be able to address some of those requirements.
Got it. Okay. Um, let's talk a bit then. We've touched on ecosystem here in the context of how these different app chains or different subnets can speak to one another and how that's changing over time. In terms
Yep.
of like kind of real life use cases, like your day job basically, who's banging on your door and asking about this in broad strokes? And
Yep.
what, I mean, I know you've already said that it's kind of an iterative process where you sit down with them and help them think about what they really need. Um, but what are the kind of things they turn up and ask, and what are some of the things you've actually seen being deployed?
Yeah, so maybe I'll just go through like three high level examples.
Right.
In the first instance, we partnered with Deloitte on this platform called Close as You Go, and it's basically meant to get different government agencies onto the shared accountability platform to get disaster relief recovery funds to victims more quickly, efficiently, and with less potential for fraud. And so in this case, this is being built on a subnet, and if you look at the interface, it feels very Web 2. Someone logs in with traditional kind of login credentials. There's a wallet that's created on the back end, but from their standpoint, it looks very much like standard, you know, web interface login credentials. And there is a valueless gas token that's powering the transactions on the network in a way that for a lot of regulated institutions, obviously they can't hold crypto. So this is a way that allows them to power the transactions without having any kind of cryptocurrency on their balance sheet. So that's at a high level one example. Another is a protocol that's being built using a kind of hybrid C chain subnet model called RE, which is basically building a tokenized reinsurance platform on chain. And so generally they like to liken themselves to kind of a decentralized Lloyd's of London, by basically connecting accredited investors or even institutional investors with reinsurance opportunities in ways that historically they've not had access to. And so this concept of asset tokenization, which ultimately enables different aspects of the democratization of finance, is something that's extremely kind of top of mind and topical for a lot of different use cases. And on that last point, I'd say I'd be remiss if I didn't highlight KKR and our partnership with them in Securitize last year, who tokenized part of their recent healthcare growth fund on Avalanche, and basically allowed qualified purchasers on the Securitize platform with a few clicks to basically subscribe to a tokenized version of their fund with lower than average investment minimums. So at a high level, I'd say from a financial institutional standpoint, the different use cases that we're seeing thematically are either kind of along the lines of institutional DeFi and using DeFi rails to power financial services transactions. And then separately but relatedly, the concept of asset tokenization and all that kind of entails and the possibilities associated with that, I would say, are kind of the two major themes that we're seeing in our partnerships.
Well, you've hit the magic word of 2023. We said when we were doing the last year, the end of year 2022, we said the topic next year is going to be tokenization. We know it's the buzzword that's going around now. I know this because of the people I spend time around, and you know this because of the people you spend time around. But for those who don't know, sorry, Morgan, you've come too early in the year, because otherwise we might have laid this out already in some detail. When we say tokenizing assets, and you said also tokenizing real world assets, like, we don't have to go through all the nuts and bolts, but what do we mean by that? And you could explain it by comparing it to like the system it supersedes, or you could explain it in objective terms, whatever's like kind of easiest.
I'm just happy you didn't say RWA, because that means something very different in the world of traditional finance. And I feel like the crypto industry has adopted this term. And those of us who are really working on driving this forward are on a mission to figure out a better word than RWA.
Too many acronyms, and it also shows you a bit of a gulf between the technical folks in crypto land and then the traditional finance people who are blending over time. But yeah, absolutely.
I mean, I think at some point, and we can go through this, but basically asset tokenization is all about bringing off-chain assets on-chain. Marrying the digital representation with the off-chain asset entails, again, bridging assets from their primary ledgers in the off-chain world to the digital ledger on-chain, and ultimately enabling greater liquidity, more transparency, faster settlements of things, again, like premium, margin, payouts, and fund disbursements. But ultimately, where we're trying to get to down the line is also enabling the ability to not only access, but also to kind of borrow against these assets that are considered historically potentially illiquid, and really kind of being able to put idle investments or capital to work. So generally, I think, you mentioned we're too early, or we're extremely early in the process. I do think we'll get to a point where all assets, and I think this concept is becoming more and more prevalent in the traditional financial services industry today. But I think we'll get to a point where it's not going to be called asset tokenization or tokenized assets. They'll just be assets, and they'll just happen to be tokenized, and they'll happen to be running on blockchain technology. But it's just like some of my partners, my marketing partners, like to remind me. They'll say digital marketing was a thing at one point, but now it's just called marketing. Right? At some point, DeFi will just become finance, and at some point, asset tokenization will just be assets. So that's essentially where we're trying to get to. But for now, that's kind of the link we're trying to establish.
Cool. The one I say is people used to talk about e-commerce. I spent too many years at the OECD, and they have measuring, how many people are using e-commerce, and now like it's just shopping. You just buy it on. I bought it on Amazon.
Exactly.
No one says e-commerce. So yeah, that's exactly the same thing. You see it a lot. When new technology comes along, people need to put a framework around it to differentiate it from the preceding system. And that's exactly what's happening right now. The other one you mentioned, it was your second case study around the reinsurance stuff. Like, I spent a number of years working with insurers and reinsurers. And on the back end, I mean, some of the legacy IT systems are just kind of wild. It was very popular to build marketplaces, digital marketplaces for insurance contracts, because the different insurance companies and brokers and reinsurers, they don't speak to one another. Their systems don't speak to one another is a better way for me to put that. And so people have been kind of iterating on these legacy rails for years, trying to find ways to kind of squeeze a bit more efficiency out. It's a somewhat similar phenomenon here, though I would say it's probably not an incremental change here. It is a step change if everybody jumps on board. The same way like email, the POP3 and SMTP protocols were step changes as well.
Yeah,
Everyone plugs into email, and then suddenly you've just got like this totally different way to communicate compared to what preceded it. I suspect that's kind of what we're seeing here at the moment. And I agree with you. At some point, it's not going to be called DeFi. It's just going to be like finance and how we store information and move it around, and
totally.
then there'll be something that comes after it. Hopefully, as we move forward.
Yeah. And I think
Not
one thing you mentioned that I'd want to emphasize is I think just by tokenizing something doesn't solve all the issues, right? It's not tokenization is not the end all be all, and it's not the thing, frankly, that enables the democratization of finance that we always like to kind of talk about. It's really the tokenization is one component to the other requirements, which are really the digitization of issuance, fund subscription, administration, management, throughout the life cycle of the investment, which makes tokenization um, like economically viable for asset issuers and investors. In that that whole process makes smaller deal sizes or fractionalization economically viable, where historically having smaller deal sizes in certain instances is just prohibitively expensive because of all the manual ways of doing things, of processing certain trades, transactions, and the life cycle of certain things. And so it's that combination that really therefore makes sense to tokenize and to kind of lower the barriers to entry for issuers and investors, which I feel like people, in general, isn't necessarily as like appreciated, and something that I think we just need to like be banging the table about.
Yeah, I mean, good point. It is a gradual process. It's not going to happen overnight. I have an excellent book somewhere with an excellent quote about. It's called The Victorian Internet, and so this person's comparing the telegraph to the internet in terms of how they changed society. And this person pointed out that kind of there were dreams in the late '90s that all of this internet-enabled technology would mean that people can work from wherever they are, and it would change the structure of organizations because they could kind of be less hierarchical and things like that. And it took 20 years before a pandemic forced everyone to jump on the cloud. And now
Yeah.
here you are, you and I are here doing this like it's the most normal thing on the planet, recording this podcast. It doesn't happen overnight. And there's going to be a process of sometimes jarring structural change to potentially to the way certain industries, maybe economy wide, depending on how many use cases are found. It's not going to happen overnight, though, and it can go very
Well,
wrong as well, as we know from lots of ways of prior technological change.
yeah, but it's definitely, I think you would agree, it's definitely exciting to kind of be on the forefront of that change, and having the ability to firsthand help to kind of shape what that future looks like, and frankly is a large part of why I'm here.
Yeah, if you're curious and you like taking risks and you don't mind failing a bit along the way, this is definitely a spot you want to be. The rule book's not written, and yeah, it's tremendously fun and enjoyable, and there's lots to learn as we're going through the episode today. Let's segue towards the end because we're coming up on time. Let's think, and we've just touched on it a little bit here, so maybe we narrow the scope, the future, and looking ahead. You could speak in your role at Ava Labs about kind of where you see opportunities cropping up in the future. You've mentioned gaming already, and I after all the venture capital money that went into crypto and blockchain enabled gaming, listeners, it was the largest segment of $28 billion worth of investment last year, and that was during a crippling year macro. So that might be one, gaming, but there might be other ones. I look to you. Where do you see opportunities in the medium to long term?
Sure. So, I mean, I would say right now, a lot of the way that enterprises and institutions are approaching this space, I think a lot of them are just trying to think about relatively lower hanging fruit type ways to be able to like dip their toes into the space, generate incremental revenue, whether that's with gaming, with NFTs, with kind of membership and loyalty type rewards programs, things that for them allow them to test out the technology in a relatively lower risk type way and lower barrier to entry type way, which I think we'll continue to see, you know, for sure. I think that just taking a step back and thinking about like the broader opportunities, and your previous guests on your podcast may have alluded to this, but stable coins in general, I think a lot of us think about as the killer app, which obviously there's a ongoing regulatory debate about stablecoins currently, and so I won't necessarily comment further on that. But all the things around payments, FX markets, and things that can enable, particularly for end users in emerging markets, I think we're all very excited about different like payments use cases as well. I also think the ability to use DeFi primitives or DeFi applications is kind of the top of the funnel for a lot of, whether it's gaming or other type of retail use cases, and really seeing the merger of these different verticals really starting to happen and effectuate, I think is something that we're also very excited about. And frankly, there's probably a ton of use cases that just haven't even been developed at this point, from not necessarily incumbents, but from new players in the space that are really truly developing novel things that will get the next billion users on chain in a way that frankly obfuscates away the whole blockchain wallet being on chain concept, in a way that really lowers the barriers to entry and feels like a more traditional experience, but in a way that happens to be faster and more interoperable and really kind of opens up the possibilities for different retail users. And I think we're all kind of waiting to see how that develops. But that's the key, I think, is really obfuscating away that end user experience. It's funny, I think sometimes we get asked, how would you explain blockchain to your mom? And the answer is, you wouldn't, or we wouldn't, because she doesn't have to know, right? She doesn't need to know how Venmo works. She just needs to know that it works to send money. And so in the same way, I think if and when we get to that point that we don't necessarily have to explain what that on-chain process looks like, I think that's really kind of the signal for success, and a signal that the industry is really kind of taken major steps forward.
Yeah, we come to that topic quite often in the discussions on this podcast. So listeners already know my story about PGP encryption. So I'm not going to tell you that one again. Let's do the one from this episode, POP3 and SMTP. Some people don't even know that there are protocols that underpin their email. They would have no idea how the protocols work. And it doesn't matter exactly. Like, I don't want to say who cares, because sometimes you want to know what's under the hood to know how it can fail. But when it comes to mass adoption, it does tend to be a situation where you don't need to know what's going on under the hood. As you say, it just works. It's for whatever reason, it's faster, more reliable, cheaper, whatever dimension or multiple dimension than what came before it. So be it. People will even be patient with something that's suboptimal for a while, and so you get new services. This is kind of why, and this is closing out, I suspect what's really nice to see in the industry as it's grown and diversified is people being brought in from a design and user experience background. Those skills were lacking early on. I mean, the technology was built for very niche technical people who knew how to use it, barely, in many cases. Like that, pulling in those kind of people might be the way in which you make stuff that is just usable and you don't have to care what's under the hood. But part of your work is getting the institutions and companies on board, because if there's no one offering services, it says no one offering services, right?
Well, I think, Ben, that kind of brings our conversation full circle, right? Is that the industry needs a very wide kind of variety and combination of people and companies with very different backgrounds to be able to kind of take all these puzzle pieces and put them together in a way that makes the technology more accessible and real for end users, right? And so you need more than just deep kind of technologists and devs. You need business people, as well as other types who can kind of, again, toe the line in both worlds, and who can kind of make things real for the end user. So way to bring it back to the start.
Nice one. And with that, it's a very nice note to end on. We are out of time. Morgan, where can people find you on the interwebs and where can they find Ava Labs?
Sure. They can find me on the interwebs in two places. One on LinkedIn, where it's just, you can find me by searching for my name, which I see right here. And then on Twitter, my handle is at Morgan Krupetsky. So this minus the space is where you can find me on Twitter. And then happy to kind of continue the discussion with anyone who's interested from there. And again, also happy to connect anyone with other people within the Ava Labs company or the Avalanche ecosystem as well.
Excellent. Well, that was Morgan Krupetsky, Director of Business Development at Ava Labs. Morgan, thank you very much for joining me today.
Thank you for having me. Really appreciate it.
It's been an absolute pleasure. Now, listeners, if you're in the United States, go to wisdomtreeprime.com, wisdomtreeprime.com. Join the waitlist. You won't be disappointed. You can find me, as always, at the Bird app at Benjamin Dean. And as a reminder, if you'd like us to cover any specific topics in a future episode or to find out more, please email cryptoclarified@wisdomtree.com or send us a tweet or just get in touch with Mailing Pigeon. Whatever works for you. We accept many different mediums. Thank you very much for that. Thank you for listening, and we hope you have an excellent day.